Hello everybody, Anton Hopfel for Napa and welcome. This is the recap, the debriefing of today's Bund session. It's Monday, the 7th of October. Let's have a look to my hypos. A little bit more detail today as I'm trying to implement more information in context of reading market, longer term market, and using auction theory and of course market, or in this case more detailed volume profile. That means I also added this thing here. So this is you see hypothesis and then volume profile presets today like a range market. Why? Because when you look here, you see that the overnight session and then also the pre-market started and stayed within the yesterday as gray rectangle mark value. So that means we are a little bit inside, and our let's say I do see then my opportunities more in looking for the failed breakouts or wait. If not, it's always possible. This can also become a trend day, but I'm looking more here for the probabilities for the inside, outside to inside range trade. That means from the higher edge back into, and from the lower edge back into the value. So this is what we or me today is looking for, and also combine this as watching the behavior of the pre-market. You know, the old pre-market was in the Eurex session Bund future 8 to 9, but it's still the session after the Asian overnight session where more liquidity, significant, you can see a rise in liquidity at least in the first step before the cash open 9 a.m. coming in. And that means you can already watch the behavior of market volatility and liquidity and see if this fits to a picture. For example, you now want to see that when open at a pre-market session started and you see already 8:30, the price running away here, building a wide, big initial balance range, which I measure from, for example, here 8 to 9. And today everything fits together. It was very, very low volatility. Prices just moving, ticked up and down. A lot of time, feeling that there's a lot of time duration between two orders that moved the market at least by the minimum possible way. In Bund it's one tick, so it fits very good together. So preset like given range market. Anyway, this is not a forecast, but it's what is more probable for me to have a success than with my place fit to this environment and kind of market. So my hypos. Hypo 1 was the range long level is the lower pre-market volume edge for me to 174.50. This was around 820 and it stayed at this level. Hypo 2, if intraday range market, one can also look for the range short, of course, from this areas from the higher pre-market edge and also corresponding with the yesterday value area high. Look then for a responsive selling. This is the opposite side, then back into the value area. Hypo 3 is the long play. So if you see significant strong buying power, you can think of away from the today's intraday POCs onto towards the higher pre-market volume edge, 61 level, look for entry. And now if only then the buying power continues at the overnight high around the 63 area, there is a probability to reach the 70 and 78. Probable if there is no continuation already here at the overnight high and they try and building a double top and then increasing volume back into the value area. Means no need to cry then, close the trade because market tells you it is not high probability or more probable that we get back into the range market. So sounds easy, right? But let's see how we can then face it, what happens and how to play it. First of all, you see this is the pre-market situation and I also draw my hypos that were in the area where price reached so far. So hypo 3 was not in there because we didn't reach this area where we wanted to see market lower pre-market edge to get into this area. That doesn't happen. Instead, we see with the open phase that we getting close but not exactly at this area because it was very, very low volatility and not enough force and power like I said, in 2 days trading. And you see already here when the most of the trading in the initial balance range, but most of the trading in this pre-market area happens in between the 51 and the 62 level. So kind of not very significant or wow, let's face big OTF participation kind of start of the day. That means we go and no, hypo 1 was the range long. It didn't touch it. It also was not here before 9 o'clock. That means after reaching 9 o'clock, prices were very slow and accumulate. So no coming into if you not have traded this already in the pre-market. Anyway, just to see, it is just about testing your big picture preparation and understanding how the big picture preparation, if you're already like kind of an expert and not a rookie, when you say this is totally not fitting at all, market is not acting in this area and you don't see anything happening around at this special level or mark or area. This is how you can prove yourself and then get better and understand, okay, but what do they behave like and what does this look like? You see here, it works pretty good. That means no coming in after the open, but you see they played the range, we stay inside range market. Now here the probability here to get into the long trade, I did this because this was my hypo 3, at least the opportunity. So good opportunity for me starting here as we losing here from the value, and you can try to find an entry even before the wall breaks. Let's call it the before wall break trade. It gets you a cheap entry or with the pullback, but you always have to understand what is happening after they take out the high and how is the book is looking like from these guys who already invested on a long position and paid the offer. So anyway, you're in a trade or not, but you see in my hypo 3 very important point was that we want to see that at the overnight high we can stay there. Very important is that we get here and increasing buy volume continues, not getting with more volume on the short side back into this area. And you see at this moment everything looks pretty good. Then short-term liquidity already knocks on your door and says, all right, I think no. It's like kind of blocking. This is like kind of support or supports the idea for your trade, or it also supports the failure of the trade. And it already knocks on here and gets bigger and bigger, knock, knock, knock. And then you see they get through this range they kept on holding before the 10 minutes, and then you see this was the failure moment, and you see already like the sell volume and delta started to increase and increase and increase. This is totally then very important to understand then, wow, very good. If I do understand this, and this was my picture preparation, and I knew this, so then it's happening, so perfect. No need to cry. A small loss or even not a loss is the result for a good trading opportunity that just did not happen. And back to the idea, range market, range short then. Getting through the range long then. Getting through the range short then. Getting through, it's tight a little bit. See this volatility, very, very tiny and not big volume. It's getting tighter and tighter through the range. And then you see this time when they get with more initiative away from the at the moment PSC, woof, they playing a little bit and trying to get above this area. And again, play again the stretching of the high of yesterday. And again, getting closer to the monthly high. And remember in the big long-term picture where we are, of course, no big OTF appearance today. And also the area when you look here where the main big distribution of our composite all-time profile happened here. Also the monthly high, and also you see after this pullback situation here, this is just a range where everything is then for the big guy here, also then cheap for a short trade. And this is also, of course, target areas around then for the long as they cannot take out. Like this area here from the low volume node, see this match together even for this month and from this month. And also fits to this overall composite profile. So, of course, you have to be then beware of this is kind of target areas or where new initiative could drive us back into the top distribution here of our all-time highs. Anyway, you see then if you played this again, I wouldn't do that because I was going for my plays more obviously for the range plays and for one opportunity for the long. But anyway, you could play that, you can make your points. You don't have to do this because this is small, balanced market. Then also in a market like Bund futures, not the DAX, where you can expect then 10, 15 points even from in a range market. In Bund it's maybe 4 or 5. So this is a very cognitive eating, resources eating, brain game of scalping, which you need a high profit rate in this kind of one-to-one risk rewards trades. This just have to know. If you have only 50% hit rate here, at the end it's a zero-sum game. I think this is obvious because risk reward in this range market, if you go with a like 4 tick stop course, you also have only maybe you should not expect more than maybe 4 or 5 ticks here also on the profit when you see how this range can tighten up even less. So this is something you have to decide, but don't cry then and say, oh, it works so good, I can read it, but at the end I only made 2 ticks out of 5 trades, because even maybe you made 5 times 3 ticks plus, but 3 times 4, so it's maybe only 2 or 3 ticks left. Then if you then see what you have to pay for your round turn, maybe nothing is left. So this is then something just mathematics coming in and reminds you trading is some statistical game. Okay, anyway, if you tried to play the second kind of break into the wall opportunity as delta was increasing away here or here and just making a small loser, you could see the difference between this situation where also people get away and shifting away and it failed. Then you see here in the difference here is short-term liquidity here, this green rectangles popping up here, supporting at least your idea, and market then stays above, but also seeing guy confronted here with some short-term sell liquidity again. So it was not over this fight, and you see the idea was here more supported by the liquidity, by your heat map, by the liquidity provided, and a bit people means more serious, or at least show you support for your trigger, which could be breaking wall, getting up away from value with increase of volume to the top area before being stuck with the breakout and be the top tick Tony trade where you're always being too expensive for the trade. You see here more support coming in, more liquidity, but also now in context again, just objective. What is happening today? All right, preset range market. All right, range market preset proved already for 1 hour, 10 o'clock, maybe more other time from liquidity now is coming in because maybe the fund manager now ended their Monday early morning meeting and now liquidity is coming in. But anyway, don't be too overconfident and see and act and look like what's happening. Here's something again where you can work with the thinking of heat map, short-term liquidity, longer-term liquidity. Today more short-term liquidity appears turning to mediocre or longer-term liquidity. But you see, idea here more supported, driving away, pulling back, stays, absorption and increase of buy volume. But you see, all this volume doesn't lead to a big price move compared to the whole where all-day delta structure. You see that this is some kind of, comparing to this big move, similar situation. But you see, even though there is more duration compared to this in a delta, that means more longer time acceptance and buying. You see, it is all absorbed. And now the liquidity that supported here is changing the picture. More short-term liquidity on the ask is appearing here, starting here at this moment. So there's more like, you know what? Thank you for accumulate here your long pieces. I'm more interested in absorbing those. Not only you absorb here a little bit to stay in control with your bulls, with your idea, but you also see more liquidity starting here. That doesn't mean that trade stop. This is not the thing, but you have to understand now in context where we are. Range market, number 1. Don't want to see more significant signs of the trade is over. Means your ID support maybe is stopped now and support is fished, is getting kicked out here, the support area. And number 3, also ask liquidity is real. And when they test this, maybe they take it out, they can go back and test it and they say it's getting bigger and real. There is a more higher probability that then they fail back to and drive through the whole range to the higher edge here from the morning 59, 57, 56 and see what's happening. They stay in control of the bull. Now liquidity is still there, it's getting bigger. They still stay in control. Liquidity is getting bigger. They still in control, but they don't give up. Also the bears don't give up. Stay in control, stay in control. It's the same thing. Nothing to do, nothing to do, nothing to do. And it's still the thing. It's now 11 o'clock, 3 minutes, and they're still trying to stay here in control. But you have to understand, if this short-term liquidity now getting more a long-term liquidity, this is more significant, and it's getting to taken out. The probability that, and I draw for the very moment now, the volume profile from this today is a high probability that if we take this high value, this is taken out here, only just for example, there's a high probability that we will fall back here to this lower volume edge from the morning. This is the 56, 57 level. That doesn't mean you have to do a trade, but you have to understand what does it look like, what's the heat map, what's the behavior. So this was a short journey also to the unit of our course, is like for understanding the market, not only the footprint or the auction theory, volume profile, etc., but it's also like heat map reading and understanding how liquidity can affect and gives you support or failure trigger for your trading play. All right, so far liquidity is strong. We have a bullish imbalance now. Possible if the selling stops, and now we're getting back more to aggressive buying. There's an opportunity that the price, of course, can go higher. But remember, we get into this area where the long-term low volume node is coming. Maybe the volume edge, also the monthly high here at the 78. You never know, but everything is possible. Just read it, understand this in context, and read the intraday market information to see if that supports your idea or to end your idea. All right, thanks for watching. Anton Hopfe for Manapa.